Hey everybody, Randy Wolf with QuoteMyMedicare.org. Today's short video is going to deal with making smart Medicare supplement choices. It's going to be a very short, sweet, to the point video, but I think you will take some value away from the information we discussed. So let's hop right in. So when we're talking about making smart Medicare supplement choices, one of the things that come to mind is simply when we're looking at these different plans, everybody is looking to try to get the best value. And it's not always necessarily about dollars and cents. And it's a holistic picture of everything from the benefits to the premium to the company's history, their rate increase history. All of those things come into play when we're looking at the value. But one of the analogies that I want to give you to really put some things in their perspective is something that we as Americans deal with on a daily to weekly basis, and that's fuel. And when you think about it, I was on the phone the other day with another gentleman in the industry, and we were talking, and he actually brought this analogy to my attention, and it made me think about it, and I wanted to put it in the video. And that's the gas station. You know, if there are two gas stations, you're driving down the road, you're getting low on gas, and there's two gas stations on opposite sides of the street, and one sold regular unleaded gas for $2.02 per gallon, and the other sold regular unleaded for $2.46 per gallon. Now, granted, let's say that the gas stations are, equally clean and safe and that sort of thing. They're the same gas, same grade, same everything. The question is, which one of those would you get your gas from? And I think the majority of you out there would answer, of course, well, that's easy. I would go to the one that's $2.02 per gallon. And we're only talking about a minimal, we're talking 44 cents. 44 cents per gallon. We're talking pennies here, pennies. Yet, people, of course, when they're faced with these two situations, they're going to go to the one that's least expensive. More commonly than not, it's a situation to where in your area, in your neighborhood, or wherever, where the places where gas is reasonable, or you have your place that you go and your places that you avoid. Here in Chapin, out here near Lake Murray in South Carolina, I've got a gas station right up the road that is convenient. I go in there to get, miscellaneous things, but I typically don't get my gas there because they're literally like 15 cents per gallon higher than if I go a little further down the road to the next gas station. So when we're looking at this is something that makes perfect sense. But when we start talking about Medicare supplements, this sort of is one of those things that I feel like people they don't take advantage of. Medicare supplements are standardized. I'll say that again, they're standardized. The benefits are the same. We're talking a G plan. In this scenario here, we have a proposal that I put together. This is a real life, real number proposal. Zip code 29036. That's my zip code here in Chapin, South Carolina. And for a 65-year-old male non-tobacco, same exact plan, same exact benefits. The difference is one company in this particular example, Equitable, that great company, and we actually we're licensed and approved to do business with them. So great company. Not saying anything bad about Equitable, but in this particular situation, because it changes based on geographic location, those sort of things, and age and income, or age and non-tobacco ratings, that sort of things, $124.58 per month. Whereas with New Era, Philadelphia American Life Insurance, New Era is the parent company. With them, it is $100.55. So you're talking about a pretty big difference. With monthly premium. If you break it down on an annual basis, that's $288.36 on an annual basis. Over 5 years, it's $1,441.48, and over 10 years, we're talking $2,883.60. So the question is, why? What is it that causes people to just sort of get on a plan and stay on it, or pick a plan in the first place. If you're turning 65 and watching this video and you're getting ready to start Medicare, you may be someone obviously talking to some friends and getting information. And I always encourage doing your research and talking to your friends and trying to figure out what they're doing and that sort of thing. But oftentimes, there are reasons. It could be that a big name company. And again, another company we represent here in South Carolina is Blue Cross. And Blue Cross is a well-known company. Everybody knows Blue Cross. But when you look at from a standpoint with their Medicare supplement rates, say for in the Columbia area, they're not quite as competitive as many other companies that offer the exact same benefits. Yet they have the second highest market share here in our area. Behind United Healthcare, they have the second highest market share because of their name, their brand recognition. People know Blue Cross, and again, they're a great organization. But the question is, do you pay much more for a name and get the same exact benefits, or do you do as you do with the gas? Do you go to do you look at the best value? And certainly there are aspects and things that we look at aside from price. I don't want to ever, say that price is the only thing that we look at, because we don't. When we're dealing with our clients, we look at many different factors. We look at the insurance company's financial, ratings. Are they stable? If they're not, that could possibly mean high rate increases down the road. We look at their rate increase history. We look at it based on a per age basis, and then we look at it across the board. What kind of rate increases historically have they had? We use our expert knowledge of dealing with these companies on a daily basis, and that we kind of understand and know, can sense sort of the direction maybe a company's heading. If they're having a lot of claims, or, we see trends in maybe another state with some of these companies are having these big rate increases, then we can kind of predict that, hey, this is probably coming to your state, wherever, if you're a client in Georgia or North Carolina, Virginia, or here in South Carolina. So those are all factors that we look at. But again, when you look at the fact that these plans are standardized, we're talking the same benefits in different pricing. I'll give you another example. This was a proposal here in Atlanta, Georgia, that I put together, and this shows this is a very drastic difference. Now, two things I'll point out. Notice the age. This is not a 65-year-old. This is a 72-year-old. The older you get, the wider this gap can become. And so in this situation here, we have a 72-year-old male, non-tobacco. Everything was the same sort of male, non-tobacco, F plan, and in Atlanta, Georgia, paying $229.60 with Oxford Life. And over to the right, we see a Plan G with 72-year-old male, non-tobacco, everything the same, different plan, Plan G, and we're looking at $139.77. Now, the only difference between Plan F and Plan G, the only difference is Plan G, you have a Part B deductible of $183 each calendar year. That's it, $183 deductible. And I have other videos, if you're interested, that go further into depth talking about Plan F and Plan G. But for the purpose of this, $183, yet if you look at the annual savings, it's $1,077.96. These are real numbers, and we see it all the time. And I'll go back, that person maybe got on Oxford when they were 65 years old and have just not changed. Or maybe they got on it a few years ago and there's been rate increases, and they're just sort of riding it out. Unfortunately, maybe they enrolled direct with the company, and of course the company's not calling telling them to change, or maybe they used an agent or a broker and they're not staying in touch with them. Those are reasons why I recommend getting a good broker that's going to stay in touch with you and keep you up to speed. And that is something that we do. And, our service costs nothing. It costs absolutely nothing to use our expertise and our knowledge and to have us as an advocate for you. You pay us absolutely nothing. You pay no higher premium, certainly, for using us. There is no advantage going direct to the company. Using a broker like us, you're going to have someone that's your advocate that's going to be saying, hey, we need to take a look at some other options. These rates have gone up and they're no longer competitive. But again, I'll go back to this example here. Real world example, $1,077.96 annual savings. You look at that over a 5 and 10 year period and it gets substantial. We're talking over $10,000 over 10 years. And folks, we're talking the same plan, same benefits, same plan, same everything. So if you're over 65 right now and you have been on a plan and let's say you have an agent or you have a broker and you haven't talked to them in quite a while, I would encourage you to give us a call and let us run some proposals for you. There's no obligation whatsoever to speak with us. You have absolutely no obligation. Give me a call. I'll be glad to put some proposals together for you and show you your options. You'll see what your options are, and it'll give you a good understanding of whether or not you're in a plan that is competitive. And it may be that you are. And the great news is if you are, guess what? I'm going to tell you that. I'm going to say, hey, look, you're in a great plan. You don't need to do anything. Maybe we're talking a difference of a few dollars a month in premium change, and I'm going to say, hey, you know what? This is a good option. This would be something that maybe we would recommend. I'd stick with what you got. And at least you'll know. Or you may be a situation like one of these examples I've shown where you're literally throwing away hundreds, if not, several hundred to $1,000+ because of the plan that you're on is no longer competitive, or maybe there's an opportunity to look at maybe going like from an F plan to a G plan and saving these huge savings in premium. So I would encourage you, if you're over 65, give me a call. If you're turning 65, definitely. We have many videos I'll show here. This is our website, and we have a ton of valuable information, lots of videos, resources that you can get. Another thing, whether you're turning 65 or over 65, on our website, you can click on schedule a virtual appointment. And when you do that, it's going to take you to my calendar. And you see here, and there's me, and you say, okay, I want to talk to Randy about this. And so maybe click on Monday and 7:15 p.m., you work, so you want to talk to me at 7 o'clock. Click on the calendar, schedule the call, and we can talk. I can go through your options with you. Or maybe, again, you work and you can only do it maybe on a Saturday. I don't have many times available on a Saturday because obviously that's kind of a day I like to try to spend with my family, but I'll make exceptions and talk to people that way. So, and of course, as I said before, you can certainly give me a call. There's no obligation, and you can get a good understanding of if you're over 65, whether you're on a competitive plan. The other thing is, it's good to have an advocate. We basically we stay in touch with our clients. We're gonna stay in touch, contact you, keep you up to speed, do annual reviews. I look at it like another example. I used the gas station earlier, but another example is like you think about with your vehicle. Okay, you're going to get the oil changed on a regular basis, or else the engine's going to blow. So I look at we want to stay in touch and basically speak to you over the year, especially on an annual basis, and talk to you and review and see where we are, because let's face it, these plans do have rate increases, and there are times to where your plan may be great for 2-3 years, and then bam, there's a big rate increase, and all of a sudden, you know what, it's not as competitive as it was when we originally put you on it. And of course, being a broker, we're not biased. As you see here, we represent all the major carriers, so you have the ability to utilize our resources and relationships that we have and get a non-biased overview of what your options are. So I hope this video has been helpful. Please, if you have any questions, give me a call. The best way is actually going to our website, QuoteMyMedicare.org, and scheduling an appointment. That works really well because I'm on the phone quite a bit. My staff is on the phone quite a bit as well. And so a lot of times if you call, you may not get me on the phone. And of course, if you leave me a message, I will return your call very promptly. But again, I'm on the phone quite a bit, and so is my staff. But if you schedule a virtual appointment, I can make sure that time's blocked out specifically for you, and I can give you the attention that you need. So thank you for watching this video, and have a great day. Bye-bye.